Okay, Chapter 1, Introduction to Business. Now we're looking at Learning Outcome 5. We'll describe financial statements of a proprietorship and explain how they interrelate. And it's actually more than being able to describe it. You've actually got to be able to prepare this so that if I gave you a bunch of account names, you could make some financial statements out of them. Okay? So far we've talked about the nature of business and the development of accounting principles. Then we introduced the accounting equation and showed how transactions affected the accounting equation. So now that we've got all these final numbers, after recording everything all month, we'll prepare some financial statements. So after transactions have been recorded and summarized, reports are prepared. And this information is called the financial statements. And we've got 4 basic financial statements that have to be prepared in this order. Okay, first the income statement, which summarizes revenue and expenses for a specific period of time. Statement of owner's equity, changes in owner's equity that have occurred during a specific period of time. Now when you think about the accounting equation, okay, and we think about the statement of owner's equity, we're only talking about changes that affected that account. Okay, just that side, the far right side of the equation. Now the balance sheet is a list of assets, liabilities, and owner's equity, right? Assets, liabilities, and owner's equity at a specific date. Okay, so not for a period of time, but on a date, usually at the close of the month or year. And the statement of cash flows is also a summary of cash receipts and cash payments for a specific period of time, like a month or a year. Okay, so the income statement, the statement of owner's equity, and the statement of cash flows all refer to a period of time, whereas the balance sheet is just as of a particular date. And the order that we do them in is first the income statement, then a statement of owner's equity, then the balance sheet, and finally the statement of cash flows, because each statement results in a number that we've got to transfer into the next statement. So the income statement reports revenues and expenses for a period of time based on matching. And by matching, we are matching the expenses incurred with the revenue that those expenses generated. Okay, so we wouldn't, if we spent revenue, let's say that we paid rent for next month. Okay, for the current month, that wouldn't be an expense this month because it's going to benefit next month. Do you see what I mean? So we would put that in prepaid rent until we got to the following month. That's what we mean by matching. So if we make money in a month, we're going to have the expenses against it that were there that helped us make that money. And the excess of revenue over expenses is called net income or net profit or earnings. And if expenses exceed revenue, then we've got a net loss. So here's an example. This is Chickadee Travel Services, and we've got some numbers here. They've given us some fees earned, $263,000, and then some miscellaneous expense, office expense, and wages. Okay, to make an income statement out of it, the first thing we have is a proper heading. So that would be the company name, the title of the statement, and the period of time that it refers to. Okay, for the year ended April 30th, 2019. And here are my fees earned. And then what they did was they pulled expenses over here to the left a little bit so they could have a total expense number. Okay, and the other thing they did was reorder the expenses so that the biggest expenses were first. So wage expense, office expense, supply miscellaneous expense, everything there ends in expense. You don't see accounts receivable here or accounts payable or an owner's equity account. None of that is here, just revenue and expense. Okay, so our revenue is $55,550. And now we'll do a statement of owner's equity. So just think about the accounting equation and what's under owner's equity. And we might have an investment by the owner, but we might, we'll probably have some revenue and expenses. So we prepare this after the income statement because we've got to know what our net income or net loss is. So we could use the same information that we had before. We had 55,550 in income, and they also tell us that the owner invested an additional 50,000 in the business and withdrew 30,000 for personal use. All right, his beginning balance was 80,000. So his capital account on May 1st was 80,000. He put another 50,000 in. The net income for the year was 55,550, so that would increase equity. And then he withdrew 30,000. So the increase in owner's equity is a net 75,500. So his capital account at the end of April, April, May, is that right? April 30th, capital May 1st. That should be April 1st. I'm not going back. That should just be April 1st, okay? Right. Oh, no. That's May 2018. Sorry. So that was last year. So 155,550. The balance sheet lists assets, liabilities, and equity. And the account form of a balance sheet lists the assets on the left and the liabilities and owner's equity on the right, and it resembles the basic format of the accounting equation. So here's an example. Here's Chickadee Travel again, and these are all asset and liability balances. They gave us accounts payable, receivable. If it's payable, it's a liability. If it's a receivable, it's an asset. Okay, we'll work on account names in the next chapter. And then we've got cash, land, and supplies. Those are all assets. And here's, out of that little bit of information, we've got a proper balance sheet. So this is as at April 30th, 2019 for Chickadee Travel Service. And there's the title of the statement, a balance sheet. And my assets are listed in order of liquidity this time, not in order of the size of the asset. Okay? So cash, always immediately followed by accounts receivable, then supplies, and then land. We'd have to sell land eventually to get cash out of it, so that is a long-term asset. That's 80,000. Total assets are 167,750. My accounts payable are 12,200. There's our accounts payable right there, 12,200. And owner's equity, we've got this from our statement of owner's equity. There's his ending balance, 155,550. And total liabilities and owner's equity then would be the total of these two together, and they total the total assets. So assets are 167,750, and so are total liabilities and owner's equity. Okay, so that's good news. Now the last statement in there is the statement of cash flows. We're going to do some very basic ones so that you understand the concept and that you could, put one together for yourself. But it's actually a pretty complex statement, but it gives us fantastic information. So this statement, the format of it is in 3 sections, okay? We break it apart by operating activities, investing activities, and financing activities. And when you think of invest, you want to think of long-term assets. And when you think of finance, think of long-term debt and equity. Okay? Operating activities are like current assets and current liabilities. So cash flows from operating activities is a summary of cash receipts and cash payments from operations. Cash flows from investing is for the acquisition and sale of relatively permanent assets, in other words, long-term assets. Okay, this would be investing. And finally, financing activities are cash transactions related to cash investments by the owner, borrowings, and withdrawals by the owner. Okay, so cash investments, borrowings, and withdrawals. Those are financing activities. And if it was a corporation, then, you could have long-term financing from a bank or something like that. And here's an example. This is our data. They're giving you a summary of cash flows for Chickadee Travel for the year ended in April 30th, here are cash received from customers, cash received from an investment by the owner. Okay, cash paid for expenses, cash paid for land, cash paid to the owner for personal use. Now they gave us a beginning cash balance. May 1st, 2018 was 72,050, and we need to prepare a statement of cash flows. And what the statement of cash flows ties out to is the actual cash flow or the ending cash balance on the balance sheet. So from operating activities, received from customers, paid for expenses. Okay, this is our net cash flow from operating activities. Cash flows from investing activities. Cash paid for the purchase of land, $80,000. Cash flows from financing activities. Cash receipt from an owner minus cash withdrawal by the owner. Net cash flows from financing activities. So my total net cash flow is an outflow of $19,000. I add that to my beginning cash balance and get my cash at April 30th of 53,050. Okay, I know this isn't easy, but the fact is you've got to do it yourself. Just remember that this presentation is here and you can take a look at it later, but you have to do it yourself to really start to see what's in there. But start with knowing that it's operating activities, customers, and expenses. Investing activities, long-term assets, the purchase of land or the sale of land, for example, or a building. Cash flows from financing activities, a cash receipt from the owner, and then a payment to the owner. Okay? We're getting there. So here are our financial statements for NetSolutions. I've got fees of $7,500. Total expenses $4,450. My net income is $3,050. The next thing I would do is do my statement of owner's equity. Beginning balance plus net income minus withdrawals, ending balance $26,050. Statement of owner's equity then, where do we leave off? 2018. Oh, they just repeated it then. The statement of owner's equity goes down into the balance sheet, and I've got cash of $5,900, supplies and land, so short-term and long-term, $26,450 are my total assets, and that equals my total liabilities and owner's equity, $26,450. So the balance sheet balances. And here's our statement of cash flows. We need our balance sheet to do it. I've got my cash flows from operating activities, investing activities, and financing activities. And what I do is, must be the first year of operation, huh? Yeah, it must be. So our net increase in cash and the November 30th cash balance is $5,900, and that has to tie out to the balance sheet. Okay. And there's our balance sheet. So I've got assets is equal to liabilities plus owner's equity. Now you can see why working problems is so important here. You know, you can't look at a PowerPoint and be able to do any of this stuff until you sit down and work problems. So you want to go and, work whatever's available in Cengage. Those are good problems. There's all kinds of helps in there for you. And I've got a written problem, I think 2 written problems due for this piece. Okay, you'll have to prepare some statements, but the practice is what you want to do. There are also some sample problems that that you can watch me do, and you've got the answer to it and everything for practice. Now this is details the interrelationships between the statements, and this is the relationship between the income statement and the statement of owner's equity. And that net income or loss is either an addition or subtraction to owner's equity. Okay? Statement of owner's equity and the balance sheet. The owner's capital at the end of the period is reported on the reported on the balance sheet in capital. and balance sheet and the statement of cash flows. The cash on the balance sheet is also reported on the statement of cash flows. Okay, so that's all we've got. Good luck practicing these. If you have any questions, just get in touch with me. Okay.